Hello, everyone, and welcome back to another episode. My name is Jordan. I'm a millennial investor, and if you haven't seen me before, I invest in both growth and dividend growth portfolio stocks, and I have this listed in my M1 Finance account. And speaking of that M1 Finance account, this is what the portfolio looks like that is shared down below in the description. If you want to see it yourself or invest in it yourself, it is down below, just clicking that link. And we have two in the growth portfolio, which is Amazon and Salesforce, the largest being Amazon, smallest being Salesforce. And then we have 21 holdings in the dividend growth portfolio. Now, one of the main core holdings in the mid category at around 5% is ticker symbol HD Home Depot. Now, this has been a main core holding of the portfolio ever since I started the YouTube channel back in April of 2020 when I just started this graph here with a hot $1,500. Today, we're sitting looking at my Fidelity. We're having $39,590 as of today, and this is my year-to-date performance versus the S&P and the other indexes. But I want to take a look at Home Depot today. There's a couple different things I want to look at. I just want to talk about the business in general, where they're going, the story of Home Depot, and how it continues to innovate and improve its long-term earnings and top-line revenue. This is a great company, one that's historically performed very well. Just looking at these charts, you can probably just take a glance and see how incredible the year-over-year performance is for a company like Home Depot, but also the quarterly numbers in 2022 as well that we're seeing from all these different ratios and different financial metrics. Lots of stuff we're going to talk about in this video. But thank you guys so much for tuning in. If you haven't seen me before, my name is Jordan. I'm a millennial investor, and I have these two portfolios that I mentioned that we just talked about. And if you want to check that out down below, you can check out lots of money making opportunities down below in the description, including out of savings accounts, credit card referrals, and then of course the M1 Finance referral that 124 people have signed up so far. But without further ado, let's go ahead and jump straight into Home Depot and talk about the story behind this company and its most recent earnings report. Now, Home Depot, I'm sure you all know the company, very, very well known, very common, one of the largest businesses on the planet. As of Qualtrim here, looking at the numbers, it's a $305 billion company, which makes it one of the top holdings in the S&P and one of the best businesses in the entire planet. Huge company. Now, this company is still growing, so let's hop over to the quarterly here, and let's look at the revenue, okay? You can see that despite the recession, this company just came out with record revenue of $43.79 billion for the quarter. Now, in terms of its profitability, its net income, its bottom line profit came in at a record level, $5.17 billion. And P.S., by the way, if you look at this chart, other than this one quarter in the beginning of 2009 with that teeny tiny little loss, every single one here is positive, going back to the stinking 80s, which is just unfathomable. It's crazy to think about. These numbers are getting ridiculous. Now, if you look at some of their highlights here, I won't go over it too long, just some bullet points here. They talk about the growth, the comparable sales. Now, the comps year over year from this quarter was plus 5.8%, which is pretty impressive considering we're in a recession. Now, the United States, so only North America comps, were plus 5.4%, but still growing very close to the comparable sales of the overall business. Now, diluted earnings per share were $5.05, which is 11.5%, which means that the profitability, the actual earnings per share, grew double digits this quarter, year over year, and that's due to some of these bullet points right here, like their record download sales from their mobile app, and as well as some other things like their profitability metrics, which I'll talk about how they're doing that right now. Now, really briefly, I know you guys probably all know Home Depot. The main ways that this company grows its business is mainly through two methods. It's either opening more stores, that's a given, or B, it's from growing its sales from its comparable stores that were already open. Like these number right here, that means that on average, every store that was open today sold 5.8% more than they did a year ago, the ones that were already open. And then, of course, they continue to build out new stores, having 16 in my home state and across the United States, having 2,005 and 2316 in total, counting Mexico, Canada, and all these little weird ones like St. Thomas and Guam and all these other weird ones. Didn't even know they had ones down there. But Home Depot has a long-term history of growing capital that is invested in returning money to shareholders. This company returns billions, with a B, billions of dollars of money to shareholders, and this gives you an idea of the timeline of how Home Depot came about from 1978 when this started, going to 2018 is how far this little roadmap goes. I thought it was just really cool if you wanted to pause it or read about it. I'm not going to go line by line, but if you want to look at it there. And not only has this company grown so much in the past, looking at these year-over-year charts, you can see how much this company has grown, but according to analysts and according to my own opinions, I agree with them, you can see that the business is projected to keep growing. So in terms of its earnings per share this year, it's projected to grow 6%. Next year in 2024, the following year, it's supposed to grow 4.85%. The following year after that, it's supposed to grow about 7% again. Now that's profits. Its revenue is supposed to go up an additional 3%, 2%, 3% again. The top line's still growing and the bottom line's growing at a faster pace. And that's mostly what I wanted to talk about in this video. If we hop over to the stock chart, you can see over the last 5 years, it's had a pretty good return of about 100%, 99.2 to be exact. And that does not count dividends reinvested when you factor in the fact that this company is paying out dividends every single quarter, raising it every year, and raising it a pretty considerable amount, I might add. If you looked at this year, it raised it from $1.90 from $1.65. If you do that math in your calculator, that means that it raised its dividend over 15% this year, which is pretty impressive considering we're going to the depths of a recession. Now, the main reason why in the last 5 or 10 years or so, why this company's done so well, is not just because they've continued growing, but more importantly, they've become more efficient. Because if this company keeps growing 3, 4, 5% every year, that's awesome. That's good as a shareholder. You want to see that. But what really makes this company value is this ratios that we're going to look at right here, which is a couple of things that I want to look at. We'll start off with the one that's probably less important, which is gross margin. You notice how gross margin typically stays the same for the last decade. Since about 2005-ish, it hit gross margins of the low 30%. 30 to 35% or so, and it stayed flat, never really moved. It's went up 1% or so, down 1% or so, never really moved for the last, almost like 20 years now. That's crazy. Now, the interesting part is if we start looking at these other metrics, like its operating margins, which starting to get into profitability. What profits actually come from the business actually operating? This doesn't count things like profit margin, which factors in things like investments. Like if they, for example, if they made $1 billion investment into Lowe's and then sold it 2 years later for a profit, that would go into the profit margin. Operating margin is actually from the business opening its doors, selling products, and what profit is brought up from that. Now notice that once we hit right about here, the recession, the Great Recession of 2008, 2009, the company started to get more tech focused on things like profitability, like building out its own fulfillment centers, focusing on online sales and mobile app sales, and the company got more efficient. It was starting to really cap out at around this 10 or 11% mark back at the turn of the century in the early 2000s when I was a little bitty kid. Now, following the recession, they decided that it would be smarter to get more efficient. So notice once we got to about 2014, which is when the fulfillment center thing started to really take off, this company has hit a profit margin capping out at around that 11-12%. And today, as of 2022, the most recent year that we have, they produced 15% operating margins, and you can see that this is trending up. The same thing goes for the profit margins. This factors in other things as well, like investments and amortization, depreciation, all that nasty stuff, as well as things like shares diluted or shares accreted. Overall, you can see that profit margin is trending in the right direction as well, which actually hits that EPS. Now, return on capital employed. What this means is if you give them $1, what type of profits will be returned back to you? Return on capital, money employed. You can see that that's been trending up massively. Before the turn of the century, being in the mid-20s, maybe at about around 30. Today, as the most recent year, we have 53%, which is absolutely crazy. But it's not just the past years. If you even look at the most recent quarters, like we talked about, the company's still growing. Now, where do I think this is moving forward? I believe, with the analyst opinion, that this company will continue to grow its revenue slightly, probably in the range of 2 to 6% every single year, if I had to guess, which falls in line pretty close with this. I might be a little bit more bullish with this as people want to own homes and stuff, but regardless, I think that the profitability will continue to outpace the revenue growth. If the company grows revenue 2%, they'll probably grow profitability 3% or 4%. If they grow top line revenue 5%, they'll probably grow profitability 7%, 8%, whatever, and I agree with this. So what does that mean for you as a shareholder? Well, the great part is no matter what happens, as long as the company continues to be profitable, continues to buy back shares, which they have done in a massive, massive way over the last decade or two, going from $2.3 billion in 2003 to today's $1 billion, bought over half of the company back from the profits that they received just in the last 2 decades, which is just bananas. It's mind-blowing. But I think that this company will continue to pay out dividends, return lots of capital to shareholders from both dividends and share repurchases, so you own a higher percent of the company every year that goes by for doing nothing. So the earnings per share by itself will go up as they buy back more stock. The company will get more efficient, more profitable, and as more people need to do home projects like myself or someone who build homes like myself that just moved into their house a month ago, I think that this company will do fine. And when you see record quarterly numbers like this, the company is at pretty much all-time highs for its earnings per share. It's at all-time highs for its revenue. Now, sure, the future may be a bit more bleak, maybe not, but regardless, the numbers are coming in strong, but the stock price is coming in weak, which is what I want to see as an investor. From its previous highs of $400 plus, now trading today at under $300, it starts to get pretty interesting considering it's also trading at about a 2.5% dividend yield. So this is one I may buff up in the dividend growth portfolio. Who knows? Stay tuned. I'll let you guys know. But regardless, either way, it's one that I don't plan on selling anytime soon because it's just too good of a company to sell. Thank you guys so much for watching. Check out all the stuff down below in the description if you want to have some money-making opportunities or find some referral bonuses down below, as well as reaching out to me personally. But thank you guys so much for watching all the way to the end, and I'll catch you guys next time.